Hello and welcome to another update video about Bitcoin. I know it's at the moment a very boring price action. We're basically just waiting for price to follow through finally to the downside, or at least break out of the range we identified in previous videos, basically the range and the breakout points. So we're going to take a look at that in this video as well. But also I would like to take the opportunity again to highlight the different scenarios that we have on the Bitcoin chart and look at the bearish and the bullish options. We start on the 4-hour chart and we see at the moment that Bitcoin is sort of challenging and attacking the 27k level. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chart Prime. Chart Prime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chart Prime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chart Prime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. We already broke below it today. Now we're just trying to reclaim it, but that's really playing out on the lower time frame, and we're going to take a look at that in a minute. First of all, let's look at the price action of the June lows, because there is still the possibility for a bearish case. I always want to remind everybody of that every few days, because this is obviously, even though I'm not focusing on it, because we're currently holding bullish support, it is still something that we need to be aware of for risk management purposes. So the bearish case, let's start with that, even though that's not the primary expectation at this stage. But the bearish case would, for example, mean that we bottomed here in a third wave in June 22. We rallied in a wave W, which is a corrective wave. We came down in an X wave, basically overshooting to the downside. And then we did rally in a Y wave, a W, X, Y structure. Looking at Fibonacci extensions for this structure, we can see that price did reach the 200% extension. That's a bit stronger than you normally want it for a Y wave, and therefore I'm leaning bullish, but it's not really a hard stop. So typically you say the Y wave should not really go above the 1.618 extension, but it's not a hard rule, it's more a guideline. But nevertheless, that is the reason why I'm leaning towards the bullish case, or it's one of the reasons. But again, nevertheless, it is still a valid scenario that this could be a WXY structure. And then within that Y wave, we had here an A wave, a B wave, and a C wave. Also here, looking at Fibonacci extensions, if this is an A wave, the top here in February, then you can see that so A, B, C, yeah, you can see that the C wave reached roughly the 1-to-1 ratio, the 100% extension. That is actually an ideal target. So from that point of view, a bearish possibility is still very much likely. It's quite probable actually. I wouldn't show it to you if it wasn't likely. And that would mean that we're now selling off in an impulse in a 5-wave structure to complete the bear market, maybe around 10 to 14K. But current price action rather suggests that we are in a correction, not an impulse to the downside. And I think it counts better as a wave 1 to the upside, a wave 2 to the downside, and here another 1-2 setup, which could then result in a 3rd wave rally. There are other ways of counting it, diagonals and so on, but they don't really have a different target at the moment for the current correction. And if we see we have to change our view, we will, but so far price is adhering very nicely to our Elliott Wave count of a 1-2-1-2 setup. This 1-2-1-2 setup has one weakness, which is also why I'm not 100% convinced of it, but it is still probably the best we have. This wave 1 here, the yellow wave 1, which is basically the wave 1 of the green 3rd wave, is basically a bit too long. It reached a 1-to-1 ratio, 100% extension of the larger degree wave 1, or even did overshoot it a little bit. That's not great, okay? Now again, there are a few other ways of solving that. For example, the wave 1 could sit here, and this was just an overshooting B wave. There's so much stuff we can do here. Again, I sometimes get comments about, it could be this, it could be that. It can be a lot. I can give you 10 counts here, but my task and job, obviously, as an analyst, is to boil it down to the most likely options and always try to show you the most likely option. I could show you 10 counts, but it wouldn't help anyone, right? So from that point of view, in terms of bullish option, we have the option of a 1-2-1-2 setup, or that all of this was a wave 1 and we're now coming down in a deeper wave 2, but then we would get something like that. But that is only the second scenario, the fallback scenario. Basically, in my primary count, where we have the 1-2-1-2 setup, I will go with that as long as we're holding 22K. Now, that doesn't mean we go down to 22K, but it means 22K is the level, the pivot, below which I will not follow the 1-2-1-2 setup anymore. And it will morph into the structure where we say, okay, we rallied in all of wave 1. Now, all of wave 1 was, this rally was all of wave 1 to April. And we're now in a deeper correction. But then below 17.5K, we will focus on new bear market lows. Already below 22K, I'm going to start to be more concerned about new bear market lows coming. But at the moment, price isn't doing anything that would be surprising or unexpected. It's actually quite boring out there at the moment. Obviously, after that peak here in this wave 1 in April, we've been coming down in this A, B, C structure. There are a few targets here that are relevant. For example, we have for a wave 2, the expectation is that this ABC structure is forming a wave 2. That in a wave 2, we ideally want price to come back to the 50% retracement. In this case, 25.3K. Another way of measuring the target is to take the length of the A wave to go to the high of the B wave, and then to see what the C wave is, or what the projection is doing. The very first target here was the 26K level. We already reacted to it here on the 12th of May. And next target would be the 1.618 extension at 23,535. So I wouldn't rule that one out. And then another possible way, and they're all possible ways of calculating targets, is to take the length of waves 1 through 3. We go to the high of the current wave 4. Again, that might still push a little higher, but for now that's okay. And the 61.8 extension would be a key target here. That very much overlaps with the 51.8, with the 50% retracement at 25.3K. So we've got the 50% retracement at 25.3K and the 61.8 extension at 25,130. So I think there is good fib confluence around that 50% retracement. Now, looking at the C wave here to the downside, we expect one more low, because the C wave is a 5-wave move, and the correction of the Friday low or the movement of the Friday low was clearly just corrective. So let's go to the 1 hour chart, zoom into the detail, and you can see we're still running and moving in this ascending wedge pattern, broadening wedge. Explained to you in previous videos that there's a good likelihood this will break to the downside eventually. It doesn't have to, but it's likely. We can count a nice three-way structure to the upside, A, B, C. And while this could turn into something bullish, at the moment there is no evidence that it's doing that. And possibly we already topped here on Monday. But the problem is that the sell-off is not clearly impulsive. So we are left with a situation where the move up was corrective. The move down isn't clearly impulsive, but we are below resistance. So my expectation at the moment is still, as long as we stay below 27,820, that we will make a new low. Now that situation will change probably, or my viewpoint will change if we break impulsively above 27,820, because an impulse to the upside would indicate that a low is already in, but at the moment there is no evidence for that. So I hope that clears everything up. Hope you liked the update about Bitcoin. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.